Hey, welcome Shielders to what will be an educational rundown over the revamped direction of Shield. Shield Decentralized Derivatives Protocol for trading perpetual options, perpetual swap, and structured products. Now, the first product, perpetual option, is online, while the later products will be online one after another. The subsequent decentralized platform supports the development of small applications. Our perpetual swaps, which are the standard perpetual, you'll find as we go through that. We've been more specific than before. Now we're going to give the conceptual stuff to the public users. We are a decentralized derivatives protocol. Now, why DeFi? DeFi will take over the market share of CeFi and traditional finance and will become an unstoppable trend. There are already many successful DEX protocols, but there is still a huge gap in the biggest section, the derivatives protocol. Within this market, perpetual contracts are once again the largest segment, while options have always proved to be a much smaller niche than perpetual contracts. Now, back to the basics. What is Shield? Shield is a secure, stable, and open decentralized protocol based on the theory of a non-cooperative games, on which thousands of products can be developed. On a protocol network like ours, there will be many products released, such as perpetual swaps, options, futures, and structured products. Our position in the market is to be a decentralized derivatives protocol for trading perpetual options, perpetual swaps, and structured products. Innovations. First, I would like to talk about the approach of AMM that is commonly used. The automatic market maker, which doesn't solve the issue of the price differences. The arbitrage problem cannot be solved with AMM. So, for our first core innovation is the peer-to-dual pools design, which completely solves the problem of decentralized derivatives liquidity. Secondly, the Shield platform has a third-party liquidator. We made a unique innovation of the third-party liquidator. The mechanism uses guarantees that it can be cleared. Next, we created a decentralized brokerage system. And last but not least, we have Swap and Burn, which allows repurchase destruction, none of which is currently available on the market, which uses the dividend staking model. All these innovations are based on a non-cooperative game such that Nash equilibrium is reached. The agreement becomes fully decentralized and will reach DeFi revolutionary features such as non-custodial, transparent, zero intermediary tax, trustless, and easily accessible. The four core innovations enable a real protocol to run well in a fully decentralized environment. Peer-to-dual pool liquidity mechanism. We are going to talk about different liquidity mechanism. First off-chain order matching. There's no way for this model to be on-chain as it does not meet the mechanism defined by DeFi. So it is not a DeFi solution. Next, on-chain AMM. There is not enough capital efficiency, no leverage, and there is no way to go out and hedge high counterparty risk, high arbitrage risk. There will always be a gap between price and market price. So what Shield is doing is that we are giving the private pool 5 times leverage and the public pool 2.5 times leverage, and our private pool is an address that generates a private pool. So each private pool can know the order information so that it can hedge the risk. We are an on-chain compliant mechanism with high capital efficiency and the ability to hedge, introducing a feeder mechanism that is more accurate and less likely to be arbitraged. That's why we believe that the P2DP represents the future of the derivatives crypto native solution. What is Shield's perpetual options? It's the first product on Shield protocol. It has a long cycle product that does not require a rollover, and finally, we develop products that offer high returns in the volatile markets. Perpetual contract versus Shield perpetual options. Assuming Alice has $2,500 on perpetual contracts, her initial margin would be $2,500 and a leverage of 17.6 times. At point A, Alice would have already incurred a loss of $1,320. And from point B to point C, she would have lost all her money and have gotten liquidated. And there's no chance of making money on the subsequent rise of the market. On the other hand, for Shield perpetual options, her maximum loss will only be 1425.6, and there is less loss, a longer position holding time, less anxiety, and more potential for high returns. Why Shield's perpetual options will eat the traditional perpetual contracts market. You could trade with zero slippage, you can deal at the price you see it at, and high leverage, no risk of being forced liquidated, limited losses, and unlimited returns. How does Shield work? It's worth knowing that while the platform is being maintained by these key roles, there are other players in the field participating in value creation and overall supervision. In essence, the broker can bring in traders, and the traders can buy options being sold by the private pool. If the private pool cannot cover the position profit, then it will be passed over to the public pool. Liquidators, who are overall platform observers, can initiate a forced liquidation to the private pool providers, which triggers the position to be handed over to the public pool. Overall, you can see the equilibrium at play within the ecosystem. How we do pricing, we have completed the on-chain pricing of Shield perpetual options through academic level innovation. More on the link here. The future of Shield. Next on our roadmap is Shield Protocol version 2 along with layer 2 deployment. From next year, we'll start with mapping out DAO governance to further our efforts in decentralizing the project. We'll also be rolling out V3 and the developers ecosystem to give Shield platform a complete suite made up of several tailored trading tools to further push the boundaries within what is achievable while also being 100% on-chain. Hey guys, thank you for listening in, and please follow and subscribe on our YouTube channel.